Hello and welcome to this week's Market Matters weekly video update for Wednesday the 27th of April. I'm Harry Watt, joined by James Gerrish. It's been a very volatile couple of weeks in markets. In particular, it's been a pretty volatile year altogether. But in recent weeks, investors' mindsets really changed, and that's what we're going to start with talking about today. March rallied 7%. We've given all that back in the last week or so, James. So what's changed in markets mentality recently?
Yeah, huge amount of volatility to start 2022. If you cast your mind back to January, we dropped 12%. We then grinded higher for February and March. April was sort of treading water, consolidating that big 7% gain or near 7% gain in March. We've now come back 5% from the April high, which was set on the 20th. So I think that the big change has been around what's playing out in China. Chinese lockdowns as they work towards zero COVID tolerance, which I think is a ridiculous target to be aiming for, but that's what they're doing. So if you overlay that with what's happening from central banks globally, we've got this, these inflation issues which are bubbling away. We've just had the CPI print out of Australia about half an hour ago that was hotter than expected. That amplifies the call for rate increases. So you've got a situation where central banks are going to raise rates at a time when the global growth driver, which is China, is slowing. So that's why markets have been changed their sentiment from the bullish one in March to now the bearish one in April, and we've got to react accordingly. And that's how you've got to approach portfolios in a dynamic way, and that's what we'll talk about today, no doubt, Harry.
Certainly, the resources sector has been hit pretty heavily. BHP down 14%. We use that as a proxy for the mining names across our ASX, I guess. How should we be thinking about this sector now into this deep pullback?
Yeah, so you had obviously hostilities in Ukraine amplified the move in the commodities. All these commodities spiked really hard and took the mining companies with it. We've now had that backdrop of slowing Chinese growth at a time when rates are increasing and everyone's suddenly gone, gee, growth is going to slow, let's sell mining companies or commodity companies. I think now that the move is overblown. So you said just there BHP is down 14% in a week. That's a huge move from a large global mining company. The biggest index weight on the ASX 200 accounts for 11% of the ASX 200. So that's going to be a huge weight for our market. So our market in March has gone from a huge outperformance from the global context. We were the best performing global market, developed global market in the March quarter. We've now underperformed because of that, our reliance upon the commodities. We're a little bit early, selling commodities at the back end of March, but I'm glad we did. We increased cash and increased our defensive positioning at the expense of our overweight commodities call. We're now going back in there, and I think BHP is, to me, around $46 is offering really compelling value.
Definitely. The energy sector as sort of an extension to mining materials. You talk about BHP, that's soon got to spin out part of its business to Woodside, so that's still got some energy exposure as well. But the energy sector in general as well, is that a different view to the rest of the commodity space?
Yeah, it is, because it's got the supply side issues. So obviously everyone focuses on what's happening in Ukraine and Russia and the impact that has on energy markets. If you cast your mind back and go back over the reports, if you like, and understand why we bought energy in the first place, it wasn't around geopolitical issues. It was around the lack of new development, lack of new holes in grounds, if you like, before that. So we've got supply side constraints at a time, and crude oil rallied up to 135 a barrel based on this supply side issue already there, and then it was amplified by what happened in Ukraine and Russia, and then we saw a spike and a big blow off style top. That supply side issue is not resolved. So our view was, and we've done this week, we bought Woodside in our flagship growth portfolio after it pulled back to near $30. I think you've got to be active around your exposure in energy, but overall we're bullish. So what's played out in the last week hasn't changed our bullish overarching view on the energy space. So and we'll be trading that accordingly.
Definitely. Finally, James, you mentioned Woodside. That's one of the positions we bought this week. There's a few trade alerts out today, but for the plenty of new subscribers that we've got coming on board, do you have any stock picks that you like to hang your hat on today to give some new subscribers some ideas?
So I touched on BHP there. So we've got a 6% weighting in our flagship growth portfolio and 8% weighting in our income portfolio. If we had none, we'd be buying it around $46. I think that's a standout buy in this market. Woodside, as I said, we bought yesterday, which subscribers would have seen an alert for. This morning we've put out a couple of alerts in your portfolio, so taking on new positions in Paladin and Select Harvest. So we're bullish on those areas. In stocks that we've recently bought, I think TPG stands out as sort of a defensive quasi, a defensive place in the telecommunications sector. I like the telcos here. So you've got, TPG's relatively cheap. It's a turnaround story, and it's in a sector that's quite defensive. I think if the first quarter and April's anything to go by, volatility is going to be high. So you want to be, the way we're approaching portfolios is sort of trading around the sectors, but also having more of a bedrock of defensive stocks. You will have noticed our portfolios transitioning more towards the defensive areas. So we've added Woolworths in a growth portfolio, TPG in a growth portfolio. Goodman Group is more defensive when markets become volatile. So I think you need to have those positions that are offensive, and then trade the sectors as they as they come up, like the resources trade at the moment. And the resources trade overall, I think it's one to continue to be bullish on, but again, trading around the edges on that space. So a couple of ideas, and no doubt there'll be plenty more alerts coming in the next couple of weeks as markets throw up opportunities, Harry.
Definitely keep an eye out for reports as always, and keep an eye out for text messages and alerts as they come through.